beats of my heart, I can't say no. It's ripping me apart.
Hey guys, welcome back to the channel, and today we're going to talk about stocks, and we're going to give you some stock tips. We're going to tell you what stock we think going to be rising shortly, and some of those stocks now is the best time to get in. So I want to make sure that we all equipped and we all ready to buy stocks and we all ready to jump in. As we know, there was some restriction. China is opening back up, and most of the tech stock, they're really tied to China. So once China start opening back up, we will see some of those tech stock rising again. But what I will do is I will go to Jim Cramer and Jeff Marks from the CNBC Investing Club morning meeting. I'm going to share a clip from that, and if you haven't joined them, I strongly suggest that you join CNBC Investing Club, where you could get those tips firsthand. They also have a list of stocks that you can look at, so consider joining them. But until you do, let me just share the clip from this morning meeting with Jim Cramer and Jeff Marks from the CNBC Investment Club. Let me go ahead and let us do that.
Exclusive for CNBC Investing Club people. I've got to tell you, once again, we are in a mixed market. NASDAQ had a very big run, now seems to come in for profit taking, but the Dow stocks reacting even with Nike down. Jeff, they're reacting to the idea that China may be coming back into play.
Yeah, it's certainly good news. China easing some of their travel restrictions for international travelers from a 14-day mandatory quarantine to 7 days. Now, I do want to make it clear this doesn't mean that China has completely moved away from their zero COVID policy. I think it's important to have that context, but it's certainly lifting a lot of stocks in the market, in the portfolio today, whether it's the energy complex, Disney, Wynn Resorts also a big one too. So it's certainly being greeted as a step in the right direction.
Right. And now remember what we said was we had a full position in energy that we bought on the way down. So as they start coming back up, we're trimming. That is our discipline. We are trimming some Chevron.
Right. We're going to trim some Chevron. We'll probably get the email out maybe shortly after this, but for a nice gain this year, which I think is always important.
You know, what you don't want to do.
Well, there's Morgan Stanley.
What you don't want to do with the oils is this is a very interesting portfolio management thing that I've learned. Okay, so when it fell down here, we recognized, you know what, we were profligate. No, we did sell some up here, so we were not numbskulls, we were profligate.
Right, earlier when the war broke out, 170.
We sold that. So we both agreed, off the desk, so to speak, that when oil runs again, because we have so much oil and the stocks do have these big moves, we are going to trim. So today, when they've had very big moves, your first instinct is to not follow your discipline. In other words, you just want to throw it out because you say, wow, they're running. A great portfolio manager says, my plan was to sell into strength, and I'm going to do my plan, and that's why we're doing the Chevron. So it's not anti-Chevron, it's pro-discipline. The things that we do as managers are often to contrast discipline and conviction. We're holding on to some Chevron because we have conviction that Chevron is good, but we're also letting some go because that's discipline.
And let me say this, Chevron instead of a Devon, a Coterra Pioneer, is it because the other three have those larger dividend yields?
Yeah, and we know that Scott Sheffield, just this weekend, said once again, we are going to have the highest dividend in the S&P. I like a guy who brags about that. Now, the Chinese news giving some lift to commodities. We have oil and gas, and that's good. But the things that we're trying to do is we're trying to stop inflation at the same time. So we got some Case-Shiller numbers that are being ignored that we can't, which shows that housing may be slowing, but not enough.
Yeah, a step in the right direction. We don't know if maybe this is peak month-over-month growth, but I think it's a sign of, maybe we're finally starting to see a little bit of a cool. The housing market's just been so hot.
I know.
And so anything that slows down pricing, I think, would be a win for Powell.
Now, there are people who say you got to buy the home builders right now. You have to wait until the next hike. It's too dangerous to buy them right here. Now, we talk in China. We mentioned that Wynn Resorts. Disney, I kind of front ran, but we talk about Disney, but this Shanghai Disney opens on Thursday. That's a very big deal. We got to get the discussion about Disney away from Disney Plus to the theme parks where they make a fortune.
The park has been shut down since March 21st. So it was a money loser for them last quarter. So look, if we can get these parks, the international parks reopened, running at the same speed as the domestic parks, which are just absolutely on fire right now with very strong margins, I think that would just be a huge win for Disney.
I think this is quite wrong. The balance sheet was hurt by the Fox acquisition. You want the earnings to come back and you want to start getting a dividend again, and I think that can happen. They're past the point where they're still getting hurt by this unfortunate Fox acquisition. Now, here's some pure good news. We had those tests from the banks, and one of the things that came out was that Morgan Stanley is really head and shoulders above everyone. And I got to tell you, Jeff, when I look at what Morgan Stanley's doing, to me, what they're saying is, once again, we've got this terrible pattern. Yeah. I think the pattern can be broken by what Morgan Stanley just said.
Yeah, they were the winner of the night. They announced a $20 billion share repurchase program. That's about a little less than 15% of the market cap for the bank. They increased the div by 11%. So the yield moves from 3.6 to 4% based on yesterday's close. And look, RBC, they did take down some EPS estimates for Morgan Stanley. They lowered their price target overnight. And you also had Jefferies report too last night, and it was a weaker than expected quarter, yet you can see the stock up today. So maybe this is not as bad as feared for the banks. Obviously,
and I think Morgan Stanley, now they do have E-Trade. You can say, well, listen, maybe that wasn't so good. Wells Fargo did boost the dividend. We're still waiting for them to do the buyback, but that's the second half issue.
20% boost on the div. The yield moves to about 3% from 2.5%. Now,
if you take a look, all of these stocks have had this giant leg down. This is all in sympathy with how bad the stock market is, and also recession. But remember, if you have no recession, then these guys are going to take your money and they're going to get 3 on it, and they're going to give you 1 quarter. So you can see they're going to make 2.75 on your deposits. And that's why they are unbelievable stocks to own right here, much better than the home builders, by the way. So I like them very much.
Yeah, and Wells Fargo, no comment on the buyback, but they basically said we have significant excess capacity to do so. So it just sounds like they're going to take it quarter after quarter. Keep in mind, they bought back $6 billion in the first quarter, but then they paused in the second quarter as they were brushing up towards some of their capital requirements. So, but they still have plenty of excess capacity. So we'll learn more when they
report. Now, we have to wait for the report. Now, one stock that, remember, I was going over this morning with Carl, that you can do Starbucks, you can do Disney, all right? You can certainly do Nike. But the one that I should have emphasized was that you can play Qualcomm. Qualcomm has a giant Chinese position. By the way, so does NVIDIA. But Qualcomm also won a court suit against Apple. It was an appeal.
Right.
But this is, you're talking about 9, 10x. Time, 9 times earnings, not by sales, with a Cristiano Mon, who's a very visionary leader, moving very aggressively into autos. It's not just cell phone. We know that Sanjay Mehrotra from Micron will say, listen, the business is bad. It's not the same business as these guys.
Mm-hmm. And they were added to Bank of America's US 1 list this morning, which is basically their favorite investment ideas. No real rationale as to why they added it, but you had Cristiano on a couple weeks ago.
Oh, man, Cristiano.
He told you a story of gaining share with Samsung, and the auto business is really resonating with their customers, and IoT doing quite well also.
All right. Now, unfortunately, we bought fortunately, we bought some here.
Sure.
Unfortunately, we bought some here. Yeah. And just again, a good portfolio management. We were too premature. We thought we were down, it was down 10. We thought that it was just a place to start. And then subsequently went down 50. Did not expect that. Did not expect the vicious bear market. Ended up making, having a decent basis. We'll be fine. Now, AWS I've got tonight. The thing that I care about AWS is it is the profit engine for Amazon. Its revenue grew 37% year over year. It's got a huge improvement in margins from 30.8 last year to 35.3. It is the engine of the company. And I do think that it is going to be a refresher on how Amazon Web Services is such a good part of the company.
Yeah, I'm excited for that interview because we all know about the challenges of retail, but if you zoom out of really what Amazon's doing, the AWS is absolutely on fire. You just
37%
gave the
growth.
numbers, right? And margins have been great. So excited to hear more about really what has been a shining.
Yeah, we
part
do
of the
need it.
business.
We need it because the last quarter was terrible. And then I should point out that Bonnie Herzog, who moved over to Goldman about 2 years ago, had some very positive comments about Constellation Brands, which reports on Thursday.
We're seeing a couple positive commentary about Constellation ahead of the report, which always makes me a little bit nervous because I don't want expectations to be too high.
Right.
But I think it's clear that
you'd
the
rather
business
have it here.
Right. But I think that, based off the analyst commentary, they are doing quite well, much better than, say, Boston Beer, which continues to struggle on the hard seltzer side. The Mexican portfolio that they have, that's where the pricing power is.
Modelo Especial, Corona Light, and my favorite, Pacifico.
Anyway, guys, welcome back. Thank you. Hope you enjoyed this. I hope you had a lot of information, but we will get right back to talking some more stocks, and we will be talking about some of the stocks I'm going to share with you is more on the tech side, and with China opening, these are the stock to own now. So I'm going to talk about couple stocks, not much. I'm not going to keep it too long. I appreciate your time. And I'm going to share a couple stocks with you. And then we will talk about these stocks. And I think these are the best stocks to own right now. I think when you come out on the other side, you will be very happy with your return on your investment. And you will be very happy with the yield these stocks give. All these stocks I'm talking about, they also give a dividend. So, guys, it might not be a big dividend as the oil. I don't think any of the stocks I'm talking about give dividend as big as the oil. I mean, the oil dividend is crazy. But I've done multiple videos talking about the oil stock and talking about the great dividend. Just a side note, I will be buying PXD Pioneer tomorrow because oil is still down. But let us not talk about oil and talk about the first stock that I think it is a must buy for anybody just getting into the market right now. It is a personal favorite of mine. It is Apple, guys. Really, really strongly consider Apple at only $137.74. They also give a dividend and they're down. So you should consider buying yourself some Apple. I think you will be very happy with what will happen with you on the other side of that trade. So guys, strongly consider buying some Apple, guys. So Apple is the first stock I want you guys to talk about. And if it's your first time and you never buy any stock before, consider joining Robinhood. This is the Robinhood app here. Consider joining Robinhood. Consider opening an account there. And if you use my code, which I'm going to share with you right now, you will get a free stock by using that code. I will also put it in the description, so you can go to the description and you can use the join.robinhood.com/NEB113 and you will get a free stock. So guys, this is how you could join Robinhood. It's easy, it's simple. So I'm not going to stay too long on that, but we will continue with the stock that we need to talk about, and we will talk about another stock, a great company again, and the company that we're going to talk about is a personal favorite again. These companies I believe in is NVIDIA. They make high efficiency chip. They also give a dividend. So NVIDIA is where it's at. So guys, consider buying yourself some NVIDIA. You will be very happy on the other side when the trade is all over, guys. And if you guys are finding value in this video, please consider subscribing to my channel, and please consider liking this video and leaving comments, and join me again. With your subscribe, you will get more stock tips, guys. So just continue staying with me where you could get all that lovely stock tips. So as I said, today is 3 of the stocks I'm going to share with you right now. And today for the drum roll, for the last stock I'm going to talk about, and would you believe it happened to be one of the cheapest stock right now, is Amazon at $107.48. This one does not give a dividend, but it is a strong company and you can make a lot of money with Amazon, guys. So I hope you find value. I hope you was inspired, and I hope you're ready to go and ready to make money. As I said here, we're building wealth one investment at a time, and that's my goal here, to help you build wealth one investment at a time. Anyway, guys, see you tomorrow. Take care.
Over habits of my heart.